Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook for Wednesday, 14th of November 2012. Top performer of overnight and early morning session is dollar yen that jumps close to the levels of 80.00 after being entrenched within a narrow range in past couple of days, with the yen falling broadly after Japanese Prime Minister Noda said he was open to dissolving the lower house of parliament later this week and to hold elections next month. Noda told the parliament he would be willing to dissolve parliament on November 16 and hold elections in December if the opposition agreed to pass reforms on to the electoral system. That gave a great boost to US dollar against Japanese yen, breaking of current down the range top at 79.60, and basically attempting to base for a possible further recovery and return back to upper boundaries and level recent high of 80.67 as a signal that would signal a resumption of the broader uptrend from a 77 zone. From the other side, the basing attempt seen on the euro and the sterling as both pairs found a temporary support, but still struggling at some initial barriers, and more of this we're going to elaborate, of course, on our technical part. Just to say that the dollar came under pressure again against Swiss franc, while the Swiss franc reaches also against euro low last time seen I think around 10 weeks ago, as fresh euro weakness pushes the single currency against Swissy down towards the peg level at 120. Currently is trading at 120.40 following a rally in September that brought the pair up to 121.83. Now fresh slide from there is again threatening the level of 120 that was established by Central Bank of Switzerland as a limit that cannot be breached. Said the gold remains steady, slightly weaker of recent highs at 1738, but holding above important 1710, 1700 levels, keeping the near-term tone still in a way positive for a possible fresh extension of the rally from 1672. Crude oil also regained some ground after breaking above 85.00, but still remains within the range of 84 and 86.75, rather sideways movements at this point, and the range trading scene most likely preceding a fresh weakness as EIA agency from the United States made their outlook for 2013, and they cut the demand outlook for additional 300,000 barrels. That is quite disappointing for the euro prices, as a growing crisis worldwide is threatening of lower and lower demand. On the other side, Iran is increasing its production and export to China and Korea by additional 70,000 barrels per day. Another important highlights of today is the comments of Bank of England Mervyn King, president, that is going to testify, and they will basically face tough questions on the surging inflation, the bank stimulus policy, and even its independence when he presents its latest economic forecast later today. Economists surveyed expect to Bank of England to leave its medium-term forecast largely unchanged. They're showing annual growth of 2% and inflation at 1.8% at the end of 2014, basically below its 2% target, giving it leeway for more action. Mervyn King will probably reiterate during the media conference starting at 10:30 GMT that the central bank stands ready to restart its bond buying stimulus program, which is stopped last week should the recovery falter again. However, an unexpected jump in inflation to a 5-month high of 7% in October, maybe a trigger enforcing central bank to raise its near-term inflation prediction again, making any fresh stimulus for the economy a harder sell. Bank of England also observes observers are also keen to hear King's view on the success of funding for a lending scheme which provides cheap funding to banks if they keep lending to businesses, as well as whether there is a scope for other measures. Other Bank of England policymakers have said gilt purchases might be losing their effectiveness, and the top regulator Turner, who has applied to succeed King at the helm of the Bank of England next year, has recently fueled the debate, suggesting more cooperation across policy areas might be needed to ward off deflation. Just a reminder again, 10:30 GMT is the speech of Mervyn King. From the other side, from the United States, the Federal Reserve Vice President Janet Yellen said yesterday that U.S. short-term interest rates might need to stay near zero until early 2016, a half year longer than Wall Street dealers expected to forcefully lift employment. The central bank number 2 official viewed as a front runner to succeed Fed Chairman Ben Bernanke when his term expires in January 2012, also said that she strongly backed adopting inflation and unemployment thresholds to guide the future policy. That would allow the Fed to move away from shaping financial market expectations with the calendar dates. After its last meeting in October, the Fed reiterated that it expected to keep overnight federal funds rate near zero until at least mid-2015. And Yellen, however, argued on optimal policy would keep rates on hold for longer at the cost of a bit more inflation. That's from today's highlights. Let's take a look on calendar before we move to our technical part, the most interesting part of our session. What we are expecting, the data from UK is that unemployment rate is expected to stay unchanged at 7.9% in November, with the claimant count change in October expected to tick higher to minus 5.1 thousand new job claims compared to minus 4,000 in month of September. This is at 9:30 GMT. At 10 o'clock we have in the Eurozone industrial production that is showing a further weakening according to the forecast in September, as it dipped according to the forecast to minus 1.6% compared to a positive release in August at 0.6%. Swiss zooeconomic expectations are due at 10 o'clock. We have no forecast. At 29 is the previous month, October's release, and then Bank of England Governor Mervyn King is going to have a speech at 10:30 GMT with the inflation report included in this, and then data from US starting at their standard time, 13:30 GMT. Retail sales are expected to stay at zero for a month of October. PPI expected to dip to 2.2% according to the forecast, compared to 1.1% in the month of September, while core PPI is expected to tick higher, 0.2% forecast compared to 0% in the month of September. And business inventories for October due at 1500 GMT are forecasted at 0.4% compared to 0.6% in a month of September, and the FOMC meeting minutes, the last meeting minutes, are due at 1900 GMT, where the minutes will basically show the probably the next steps of the Federal Reserves in their next meeting. From the technicals, we're going to take a look now. Let me just change the screen. Okay, I think you can see Okay. Starting with the euro, 126.60 is the low of yesterday, where the temporary support was found, and basically bounce above 127 gives some more credibility to the current move, along with the double doji formed on a daily chart. That is the signal of probably possible reversal. As I said, the pair regained and closed yesterday slightly above 127, with 127.35 seen in the early hours of European session, giving hints of possible stronger recovery, and leaving temporary base at 126.60, where 90 days moving average on the daily chart so far contained the reversal of 131.38 lower top. Back to the hourly chart, clearance of initial barrier at 127.40 that marks 38.2% of the down leg from 128.75 to 126.60. Also the high of Monday at 127.38 is required to confirm the near-term bullish stance and the open way for a stronger recovery. However, break above 128, that is quite strong barrier. This is the previous range floor, as well as 200 days moving average. That is so far seen as a good barrier, and not expected to be cleared on that easy way. Of course, break here would be quite supportive for the pair, as it will refocus again upper boundaries of the pair. Highs reached at 131.70 and 131.38. Holding below 128 will basically be seen as current action will be seen as corrective, and the lower top below these levels will be seen as preceding a fresh leg lower. Currently, near-term studies are hourly studies are positive and supportive for further extension. However, break above initial 127.40 is required to confirm and open way for stronger corrective action. Still, this is still seen corrective, as said, unless we see the break above 128. That might bring some more positive tone in the current action, as daily structure is still studies are still in the negative territory. Initially turning higher, we can see on the stochastic, but yet no clear signal of a stronger reversal. From Ichimoku studies, just a quick look. The daily cloud base at 127.00 is offering good support, as 126.50. I do apologize. As dips reached levels at 126.60, just above this level, and this is acting now as a good support, reinforcing the recent low for possible fresh extension higher. Daily cloud top is quite out of reach at this moment. 128.86. We'll be focusing more on 128.00, 128.12, where the recent low and the 200 days moving average standing, with initial resistance at 127.40, break of which to introduce next barriers at 127.87 and then 128.00. The British pound also shows basically stays still in the sideways movements of recent low posted yesterday at 158.57, where the 200 days moving average so far held the reversal of 163.08 and the latest down leg from 161.74. Basing attempt is evident at this point, despite false break above 159 initial barrier that stalled at 159.14. This is also marking a near 38.2% retracement of the down leg from 160.18 down to 158.57, and basically this is our initial barrier at this point. Break above 159 and 159.14.19 is seen as a trigger, and basically this will be also confirmation. As we can see, there is forming the morning star pattern on the daily chart with yesterday's doji, and now today's close well above 159.00. Pardon. will be a signal completing for completion of Morningstar. This is a reversal pattern, of course, and the more focus will be turned towards the upside. In next levels to watch 159.28 previous low and the previous range lows at 159.50, along with the 61.8% retracement of the down move at 159.58. Basically break above 159.50-60 would be a good signal for some stronger recovery and the further retracement of the larger down move from 163.08 down to 158.57. But if we focus now on the latest down leg from 160.18, basically break above 159.50-60 would reintroduce 160 barrier, and the 160.18 recent peak posted on 9th of November 2012. Any failure under 159.50, I would say, would still be quite risky, as there is also descending 55 days moving average. Of course, the pair needs first to clear the 159 level, where is also the 20 days one, in order to test our breakpoint at 159.50-60. Otherwise, any failure below this level would still keep risk on the downside, as alternative scenario sees a lower top and a fresh fall through 158.57 support, reinforced by 200 days moving average that will open way for further reversal, further extension of the downtrend from 163.08 with the 158 round figure support and the trend line support at approximately 157.60 level, seen on a loss of recent low and 200 days moving average at 158.57, 158.48. The dollar yen, as said, is the top performer this morning, as the pair is pushed higher significantly by current comments from Japanese officials. Rally to 79 to 80.00, reach so far 79.93, with the bulls shown on ADX hourly chart firmly in play. But I mentioned in our this morning written analysis that gains might be posed by overbought hourly studies. That is materializing now. Basically, 80.00 is quite tough resistance, and not seen clear that first attempt. Of course, the reversal corrective action now seen as RSI is already starting to point lower, and the stochastic also yet no clear signal of reversal, but some corrective easing could be seen at this point ahead of a possible fresh attempt higher. Important is that hourly structure has now been established in the positive territory, with the previous range top at 79.60 now offering initial support, and basically ideal reversal point in case of deeper dips could be seen at these levels in order to keep the immediate bullish structure of 79.06 and yesterday's higher low at 79.20 in play for a test of and possible break of 80.00. Our break point break here is required basically to turn focus towards the upper boundaries, 80.42, 80.55 and 80.67, a break of which to signal the resumption of the broader uptrend from from a 77.12 low of 13th of September. Significant is also a regain of 200 days moving average, and basically 200 days moving average is along with the recent range top at 79.60, 70 zone now acting as a good support. Today's close above 200 days moving average would be quite supportive, while break and close above 80.00 would confirm the focus is again turned higher, and the higher low left at 79.06. Conversely, failure to hold above 79.60 and possible slide through the range floor at 79.20 would again refocus 79 as a strong support, and probably to open way for a stronger reversal. 50% retracement of 77.12 and to 80.67 is standing at 78.90. Another reinforcement of 79 support, along with the bullish crossover 55 over 90 days moving average at 78.75. Break below this strong support area would be quite bearish, as this would introduce again levels at 78.00 and probably to extend down to 77. Currently positive tone that has been established on the near-term studies with the 4-hour chart indicators regaining bullish momentum, see more focus towards the upside. Of course, break above 80.00 required to confirm the near-term basing attempt at 79.06 and the open weight for test of the upper boundaries at 80.40, 80.39, 42, 80.55 and 80.67. And finally, dollar Swiss that is losing traction following repeated failures to clear 95.00, the highest level so far seen at 95.11 yesterday, and subsequent easing now sees more focus towards the downside as dips so far reached 94.50. That marks approximately 23.6% of the latest uplift from 92.75 to 95.11. Seeing still more potential for corrective action as 4-hour indicators are descending now and running out of initial bullish momentum, while hourlies are already in the negative territory and slightly reversing towards the upside. Ideally, reversal above here would be again refocusing 95.00, while further slide would risk a test of important 94.30 zone, previous double top, and the more significant 94 level round figure and the 200 days moving average, violation of which could be quite bearish, as this would bring the pair back into the recent range of 92 to 94.30 and abandon the idea of further recovery. However, a positive tone that still dominates on the daily chart still sees this pullback as corrective, as long as gains hold above 94.30 or 94.00. As said, the break below 94 would bring bears back into the play. Otherwise, any reversal above 94, ideally at or around 94.30, would be seen preceding a fresh rally. Clear break above 95, 95.11 and the 95.24, where it's set 90 days moving average, will be a trigger for a fresh extension higher. And then we have our upside targets at 95, 91, that marks 50% retracement of the larger 99.70 to 92.13 descent, and the 96.00 as a round figure resistance seen on a break. For now, we are in the corrective action. There is a sort of a basing attempt at 94.50 zone. However, a still weak tone seen on the near-term studies do not rule out further retracement with the supports set 94.30 zone seen next, and the breakpoint at 94.00. Quick look at yellow metal that holds steady so far, despite yesterday's spike low to 17.17. Basically, the price is entrenched between 17.20 and the 17.32 range, with a rather neutral tone seen on the hourly chart, while 4-hour indicators are still in descending mode and still seeing a possible further corrective action, and not ruled out, as basically the price found support near 23.6% retracement and the 55 days moving average, that exponential moving average that so far contained the dips. Ideally, reversal at this point should keep focus on the upper boundaries 17.38 and 61.8% Fibonacci expansion ahead of 17.43, if I'm not mistaken. Pardon, 17. Wow, this has moved significantly. 1757. We have the before this we have the 1748, the 61.8% retracement of the down leg from 1795 to 1672, and basically reversal at current lows and the regain of 1738 would be again focusing the current levels, current targets at 1748 and above 1757, which is the daily Ichimoku cloud top. Conversely, loss of 1720 support could be a signal of deeper corrective action. 1713 we have quite strong support, higher low of 8th of November, as well as 38.2% Fibonacci retracement, and basically this could further weaken. The loss of this level could further weaken the structure, but main support is at 1700, close to it is 61.8% retracement, a break of which will again turn shift focus down to 1672 as a part of and probably to look for extension of the down move from 1795, 5th of October 2012, fresh yearly high, with the 200 days moving average at 1662 seen as the next downside target in case of failure, but not to go into so pessimistic action. Still a possibility is still seen for a reversal, as 4-hour indicators, despite losing momentum, are still holding positive tone, and while holding above 1720 we can still count on possible attack at 1740 and 1748 our initial upside targets. And finally the crude oil, that is currently, let's first see how the trend is. Basically there is loss of initial bearish trend. Basically we have no trend in the current situation, as the pair is, as the price is currently hovering between 84 and 86.75. More sideways movement seen at this point, with the rather neutral tone on the hourly chart. 4-hour structure is again, I would say, more neutral. Basically we have range trading since the pair dipped down to 84.05 low, with the range broadly being limited at approximately 87.30 zone, apart from the jump higher to 89.20, quick recovery and the fast reversal back, keeping basically the downside the more pressure at this point. Initial barrier at 86.75, 87 and 87.70 needs to be cleared, apart from 89.20, in order to attract some stronger recovery. Otherwise, larger pictures and negative tone that still dominates as the price holds below the descending bear trend line of 100.72 as a part of the descent from 100.72. Still sees more focus towards the downside, especially in light of recent comments that outlook for demand in 2013 has been lowered. That gives quite a pessimistic tone for the consumption of the energies in 2013, and of course might directly affect the oil price that is already under pressure from 100.72. This is the high of 14th of September 2012. Our main target remains to the downside 84 and then 83.64. Projection of the latest wave from 93.47 is approximately 80.50, and I would say at this point more focus is still seen towards the downside, unless we see break of levels which is the trendline resistance above 88 and then 89.20. That would bring some more positive tone into the oil short-term outlook. That was all from me for today. Thank you for attending our sessions, and of course I expect to see you tomorrow again. Do we have any questions for today? Please, you can submit your questions now. Okay, we have a question for the Aussie dollar. Do you see the chart? I don't think so. Seems we have a small technical problem here now. The program is not changing the screens, so Unfortunately, there is a technical problem, and for some reason the program that makes this session does not change. I can still see on your screen the old chart for crude oil, and it hasn't changed back to the main page. And now that I have Aussie dollar, so we'll skip it for today. I do apologize. We'll leave the Aussie dollar for tomorrow morning. Anyway, the price is within the broader range of 101.50 and 106.20 with the near-term price action holding still positive tone of 101.50, attempting towards 104.80, 105.00 break of which to probably extend the corrective action and open way towards 106. Anyway, more details about this I'll give you here. I do apologize again. There are some technical problems that we need to work on. Thanks for coming. Expect to see you all tomorrow morning at the same time at 8 o'clock GMT. Until then, I wish you a nice day, good trading, and good and profitable trading, of course. Good luck.